Good afternoon, everybody. Welcome to Trader Merlin Show for a painful Thursday edition. Today was a pretty ugly day across the board. It's funny because I had just a small little nice short on the S&P today, but my long-term positions, boy, did my teeth look okay? Because I think they got kicked in today. Funny because yesterday we had the topic of the show was Liberation Day, and there was this quasi-jubilation in the markets that this is what a fantastic day we're having, and things look so great, and yes, the market's this, market's that, and then reality was a pretty bad beating. Here's a map of the market that I took and I took it to, I think this is from FinViz or one of those sites that give you a map of the market. And I put it into Grok and I asked for it to give me a one punch, which is one of those, one punch animation thing. This is what it looked like right here. Just a sea of red out there. And certainly there was some companies that were green, but overwhelming red. And I guess what's noteworthy for me anyway is when you look at the bottom left corner, right? This is really what's driving, actually the left-hand side of your screen is, to me, is what's really driving the market. Apple, Nvidia, both of those down massively. I mean, it was just a bloodbath. And the worst part, well, I guess for me personally, the worst part was I don't think I could have called it more incorrectly. My expectations were that going in that announcement, we're going to see some backpedaling a little bit, some concessions, and some nice comments that said, we're going to do tariffs, but not full bore. And unfortunately, it looks like we went full bore. And so I had SMH long yesterday. I bought right before the close too. Closed that one out for a pretty significant loss. And obviously, MicroStrategy, SMCI are two of the larger positions I have. Got it just absolutely slaughtered today. So, sea of red in my account as well. I'm sure some of you took it on the chin for your long positions. And I guess ultimately, the question is, where do we go from here? Because when you have $2.85 trillion worth of wealth evaporate in a day, that's a lot of paper profits that people have been holding on to, looking at, thinking that they're rich or big paper gains. And when it disappears that quick, man, it is a pretty painful moment. Now, I saw some comments coming through here in the chat. Let me see. We were liberated from long-term profits. Yeah, there was one comment in there that said, is this the biggest drop ever points-wise in a single day? I don't think it's the biggest ever point-wise. I think that during the COVID pandemic, we had some bigger intraday drops. We had lock limit downs. Remember, we were lock limit down on the S&P multiple times during the trading session, and that's once you get to 7%. So we certainly had bigger downward drops in 2020, but point-wise, man, pretty ugly. Let's go look at the list here. Out of my entire list, none of them are green. And this is pretty shocking. This looks like a cryptocurrency kind of day. When you look at crude oil, down 7.1%, comes screaming back down. Now, it didn't quite get up to the levels we thought. We thought we were going to get a little bit higher and get up to that 72.50 mark. We didn't quite make it up there, but awfully darn close. Today, falling aggressively back down in that yellow box, which it has not broken yet. And for the podcasters out there, that yellow box is a zone between $65.27 and $67 even. Right now, you're kind of in the upper range of it, but still within that yellow box. So keep your eye on this chart here. To me, that descending triangle is still intact on the daily time frame here for crude oil. For those of you long-term traders, I will bring up a weekly here so we can see a better picture of it. And I think this really does speak volumes as to why we want to look at price on longer term time frames, because this looks like it's just coming right back down to the levels we saw all the way back into 2021 and just getting weaker and weaker. Drill, baby, drill. That'll probably continue to hurt crude oil. So that was your starting point of pain here. Now, let's go look at the Russell 2000. Now, we've had this line kind of measuring where it's going to go. We did bounce off that 20% mark back on March 3rd. And today we are now, as was commented earlier, I think by Steve, we are now down below that 20% mark. So we're down 22.59% on the Russell futures from the high we had back just in November. So not a long time for it to fall aggressively, 22.5%. Now, how many times have you heard me say that the Russell is that canary in the coal mine? Typically, when markets are doing well, small caps are the leaders to the upside, because when markets are doing well, companies have free cash. They go and they buy all these little companies, so there's usually a premium to those share prices. In times of economic slowdown, uncertainty, and turmoil, the acquisition prospects for a company to take that chance to go buy another company when the future looks really uncertain, those prospects diminish, and you start to see small caps lead to the downside as they fall out of favor and maybe trade at a discount. I think that's what we're seeing here, is that leader, down 22.59%, looking terrible from a percentage return for the year, obviously. But, as we look at this chart here, there is a little bit of hope for anybody that's expecting bounces off of historical, demand zones. You can see right around 1922, which is the low point for today. The low point today was 1917. Right around that 1917 mark, you'll see we've bounced off this back in January of 2024. We bounced off it again in April of 2024, and we're right back down to it. Personally, I feel like this kind of momentum to the downside will continue and will probably end up challenging these lows that are significantly lower. Down around, I was going to put a horse. Oh, no, we don't want that. Let's go back. I don't know what I just did. Well, that was weird. I want to draw a horizontal line here. Draw another horizontal line for you and put it right across these lows from October of 2023, just to get a ballpark idea of where that next logical big bounce point would be. That to me would be 1638 is your next logical one. How far down would that be? Well, that would be a decline of 33.76% off the all-time high for the Russell 2000. And I do think that's pretty doable. I do think that is certainly something that could be achieved. And again, it's not like we're going back decades in price. We're going back a couple of years. We're going back to October of 2023. When you look at the longer term chart here on the weekly, and unfortunately it doesn't go any further back than 2018, getting back down to those lows from COVID would take us, let's get the exact number here for everyone. Getting to those lows on the Russell for COVID would take us back down towards triple digits, 958. Well, we're still 1,000 points above that right now, so we don't need to worry about that at all. But I do think that there's a good chance we could get down to 1638 on this Russell if it continues this negative momentum and fear that's been just ripping through these markets. Now, Bitcoin holding up actually surprisingly well, because typically when you have the S&P drop like 3%, it seems like Bitcoin drops 6 to 10%, right? It always seems to be this exaggerated multiple. Well, today was down 5.5%, and that certainly was not good for me in my long-term positions, but technically not horrible. I mentioned that I don't think we're going to get back to this price level back at 76,735, right in that area. Right now we're at 82,005. I did put on the spot price of Bitcoin, which I will show you here right now, if I can get it in time. We're at 82.5, and I still do stand by this. We will never hit this level again, which is that 76,000, get the low point exactly, 76,600 will be there. I don't think we'll ever hit that level again. But today's action looks absolutely screamingly bearish with this long, it's a weekly, with a long topping tail on the shooting star formation. That's pretty ugly. Momentum looks bad on that weekly of Bitcoin. Now, moving up our list, I want to go from bottom to top here. NASDAQ. All right, this is a really concerning picture, like real concerning picture. And the reason I say concerning is we did measure out that bearish flag formation. And again, they don't have to always follow through, but when they do, they can be very powerful, large moves. As you guys can see here, the target for that bearish move, let me make sure this is exactly correct. Yep, the target for that bearish move on the breakout here, which we've already had, brings the NASDAQ 100 to a low point of 16,820. Now that's almost 1,800 points lower than where we are right now, but we're falling pretty aggressively. Certainly on today, we're down 5.48% on tech. And that does line up with a small little area of demand that goes back to January of 2024. So not looking good. To be honest, I think we hit that next week. I don't think we'll hit 1680 on in the next week. I mean, from current levels, that'd be a decline of 9.63% by next week. I don't think we'll sell off that much, but you never know. I mean, if you go back to the charts of 2020, let me look back here. Bear with me as I scroll and torture you guys with scrolling. But notice what we had happen in the early part of 2020, right? You had these big, colossal, gigantic down days, and yeah, it did, have a pretty big rush, but it was only a month and a half. Pretty big. Jeff says 1455 would be ideal. Wow. I mean, if we got to 1455, let's look at where we are currently. Sorry, I know I hate scrolling on you guys, but 1450 would bring us all the way back down to the lows from 2023. I'd be okay with that too, but think about this, Jeff. While I agree with you, if you go off the all-time high and you go to 1450, you're talking about a decline of 35% in the equity market. That would be while it might be an opportunity for some of you that have dry powder, that have capital freed up to buy with, think about how many Americans don't, right? When I look at these charts and you start thinking about the potential for big market sell-off, I look at least for me anyway, I think about wealth evaporation and gain evaporation. For me, having a pretty big down day today in multiple accounts, I'm not that concerned with it because I'm not retiring and I have assets diversified and spread around. But there are a lot of people who are in retirement today that they've lost 5% of their retirement funds today. And if that does continue, they could be losing 10, 20, 30% of those retirement funds. So, part of me wants it to fall because I will have capital to buy into a dip here in the long run. But the other side of me is like, man, I really wish that everyone would educate themselves on how to protect your portfolio and not suffer such big drawdowns as you're needing that money. I mean, as anybody who's in retirement right now is like, this is not looking good for you. I know we have a few here who are retired, and the good news is you're trading, but think of your friends who are not traders that just retired, and they're like, okay, I've got my millions of dollars in retirement funds. I'm going to rely on that to, last me through the years. You're looking at maybe taking a few percentage of that a year in deductions, and all of a sudden you lost 5.5% of it today. Ouch. Ouch. Brutal. No, it won't be 4 years of this. I can almost promise that, Lori. It will not be 4 years of this. It will be, if it does happen the way that I kind of envision happening, it's going to be a few months of real pain. And what will happen is, as we talked about yesterday, you will have other people make concessions, right? Countries are going to go, man, this is killing us. I don't have all the stats in front of me. I really wish I did. But it was something like, the United States alone is like 16% or 19% of Canada's total GDP. It's like 25 or 26% of Mexico's GDP. Whereas those two combined, if I remember my numbers correctly, Canada and Mexico combined only make up about 2.6% of the United States GDP, right? So if you slap these tariffs on Mexico and Canada, it's really going to start to hurt them. And at a certain point, the bullying will work, and Canada's going to go, okay, stop, right? It's like you've kind of got someone in a chokehold, and you just keep ratcheting it up. At a certain point, some of these countries are going to cave. And for me, that makes it very difficult because what you're going to get are real big pops up as a country concedes and says, we're going to remove all the tariffs, which is what Trump wants, right? I think that's the ultimate goal here is Trump's to remove all these tariffs on the U.S., which arguably probably good for the United States. But we are in such a power position. We are the bully, right? We are the bully that can muscle around him because we have so much. We contribute so much to other people's GDP. Without us, they're in trouble. Yeah, Vietnam already coming to talk. You know why, Maman? So Maman says Vietnam and Canada are both ready to come to talk. So I pulled up a couple things out of interest for myself. And I was thinking, who is really poised to get hurt significantly out of this? There are a tremendous amount of shoes made in Vietnam. According to Nike's last 2024 report, 50% of their shoes, 50% of their shoes come from Vietnam. Now, I might have the table up here still. Let me see if I can find the tariffs. Oh, I guess I don't have the table up here anymore. Unfortunately, I don't have it here. If you look at a 50% tariff on somebody like Nike, here's our tariff list. Let me bring it up for you guys so you can all see it. All right, so what is Vietnam doing? We'll zoom in here real quick. Vietnam, number 3 on the list. Right now, they're charging us 90% tariffs for anything that we send into, not anything, but for the goods and services we send to Vietnam. 46% tariffs are new number for Vietnam. So if 50% of the shoes are coming from Vietnam for Nike, and let's not solo out Nike. I'm sure this is the same for Under Armour, Adidas, anybody who's getting shoe manufacturing. I mean, they have dozens of plants. So last time I checked, they've got over 64 footwear factories in Vietnam. I looked up some stats here. There's 64 footwear factories, and out of that, those factories employ 337,000 workers. 337,000 workers for Nike, not for Nike, are employed at these shoe factories in Vietnam. So if all of a sudden Nike has to look for alternatives and says, we're not going to buy those tens of millions of shoes from you, Vietnam could go into an economic collapse, right? That's their bread and butter is manufacturing. I mean, granted, they have many things they manufacture, but that's a biggie to lose that much business. So it makes sense for Vietnam to come to the table and be like, okay, hold on a second, And Christopher says all those numbers are fudged. Without question, Christopher. I know they're fudged. But it's a ballpark reference that we have. Certainly there are a lot of I challenge you right now, if you own a pair of Nikes, go look at the tag on it. It's probably made in Vietnam or India, but mainly Vietnam or maybe even Thailand. So there's a lot of... that chart is bogus. They do not tariff us that amount. Not on everything, John. Not on everything. So... And of course, the U.S. is going to embellish these numbers here when they showed us that. But they do have tariffs on goods and services, to which extent I do not know. Now, Andres, it won't be a Vietnam War. This is easier. It's way easier to wage an economic war than a physical soldier, boots on the ground kind of war. Because we have the power, right? There's really very few things that we absolutely have to have from other countries. So... all these clothing brands having their merchandise manufactured in Asia and have no right to hike their prices using tariffs as an excuse. Their prices are ridiculously compared to what they cost them to produce. Totally agree with you, Lisa. Does this open the door for investing opportunities? Now, you guys saw the meme I made the other day. I was kind of joking around half-heartedly, but actually somewhat serious. And I drew a little graphic of Nike, and I said, just short it. And the reason I said it is just... I think that there may actually have been some precursor for Nike execs knowing that this was coming and the tariffs are going to be implemented. I mean, Nike's down 14% today alone, down to 55, 58. At some point, I think you would all agree, if you don't, let me know why, but at some point, Nike will probably have a nice bounce and a rebound here. Now, when? I don't know. I'm not going to jump in front of this one quite yet. Right now I'm pretty skittish on these markets overall, and my bearish side to me is coming alive and not wanting to jump and buy these bottoms right now because I don't think that the fear and panic is quite over yet. I think you're going to get a little bit more. But there are companies like Nike, which rely heavily on Asian manufactured apparel, whether that's clothing or shoes. And hopefully this will get resolved to a point where all of a sudden, Ted says those numbers are not deficits. They're tariffs. They're deficit divided by other countries. Deficit with what formula? Yeah, I saw some weird formula for that one today too, Ted. I did see the bizarre calculation on it. But either way, tariffs are coming for Vietnam. And the pain potential here for companies like Nike, I think Gap was another big one, GPS. The Gap was down 20% today. Oh, good. And it's 20%, and I'll still go to the store, and the clothing is still going to be not dropping 20%. It'll be going up. What is Trump's tariff list calculated on? So he did, I saw a calculation on that one today, last night, and it didn't quite make sense to me at the time because I was just tired and I didn't go back and revisit it. But yeah, it does something to do with the deficit. There's these two numbers here make up the deficit number somehow and some calculation, but I don't know off the top of my head. I'm really just saying, without knowing all the exact details of the exact tariffs, it was predictable that certain companies are going to take a big hit. Now, who comes to the table first to me is the question I'm looking to ask. And I think that Canada is going to come to the table right away. I've heard they've already said that they're going to. Then you have, I think Vietnam would make the most sense. I think Europe can play hardball. China can play a little bit of hardball. But remember, we consume so much from China that if we don't buy those goods and services, China is going to have an economic issue. And they're already, from some of the data, looking like they've got economic problems over there. So bottom line is, this is not done. I think what you'll get here is a lot of these countries will come to the table and work with us. Or not with us, I have nothing to do with it, but work with the President of the United States and resolve some of these tariff issues. Now, I don't know what the long-term impact of that is going to be. All I know is that these markets were getting absolutely decimated today based off of that. Now, I'll keep going up this list here. We already talked about Bitcoin, the S&P. So we've got some numbers in here that we've calculated out or looked at, and that was to look for that all-time 20% decline, which I think I have mapped out in red. Yeah. That red line down there is our 20% mark. We still have a long way to go to get there. From current levels to getting to where we're ultimately down 20% is roughly another 9% drop from here, right? So 9% drop is where we'd have to get to get down to our 20% off the all-time high. Not so worried about that right now, but it certainly is a very real possibility that we get there. If you're looking for a bounce point on the S&P, you only have one small little, area of potential bounce here, which is right around 5,400. So 5,400 on the S&P is kind of your next logical stopping point. After that, it's going down to 52, 5240, 5220. Do you think Jordans are expensive now? You might as well put them on this. It's funny. Someone was on Twitter. I can't remember her name, but she was saying, all my Lululemon is going to start to get really expensive. There's going to be and I said, I was talking about how she just bought a bunch of Lululemon. I'm like, well, hey, the good news is, if you have those fans of Lululemon who are going to be upset that they can't get their Lululemon now, you could probably sell your used Lululemon on eBay or something for a premium. Get more than you paid for it. That's how crazy prices are. Find an alternative that's cheaper. Find something that's made in America. Be the easiest way to go. I wonder if this is going to push more countries towards the BRICS. That's a good question, Chris. Who knows? For me, as someone who lived internationally and lived there for a while, I lived in Italy. Well, lived in different parts of Europe, but lived in Italy most of the time there. It's very different to see how we perceive the rest of the world or believe the world perceives us versus how they actually perceive us. So, when I went to Italy back in 2001, in my opinion, America is the greatest country on the planet. When you get there, depending on what's going on. At the time, it was George W. Bush. I forget which one's which. It was Junior. And, there were definitely moments where you just scratch your head and go, Junior, you sound really stupid making those statements. And it was somewhat of a laughing stock, at least for the Italians. And they'd always make fun of me like, oh, could you vote for this guy? What's George Bush? And I know from talking to my friends, they have that same attitude towards Trump. A lot of them just do not like Trump. Most people I talk to, my friends over in Europe, are like, "What? How could you possibly elect that guy again?" So I think that may cause a further fragmentation geopolitically, where I can't imagine Canada or Mexico joining the BRICS, but you never know. Do we create enough of an international situation where we irritate enough countries and they said, we've had enough of you? I still don't think that's going to happen. I still think we have too much of a power position given all our consumption. Even though we're not the most populous country, we consume massively. So we are an economic necessity, and we can still wield that power of control over other countries, I believe. I may be completely wrong there, and I don't want to make this a political show, but it's a good question, Chris, is how does it start to steer the political side of things, and do we see more people saying, hey, you know what, I want to move away from the dollar. I'd like to be in that BRICS community and join on there. It certainly is a possibility. All right. I've got a very long list of comments coming through today. What's the best option strategy in this volatility? Indigo, it's a tough one. If you want to be a buyer at lower prices, I certainly think selling premium is the way to go. I'm not a spread trader, and I get a lot of grief from people that because I'm not a spread trader, I'm either going to be a buyer or a seller, period. I keep it pretty binary. Certainly, you could make the arguments that different strategies may be better, but that's not my wheelhouse. I'm not the iron condor, butterfly, strangle guy, or straddle strangles. I'm really simple in the way that I trade options. So for me, right now, it's looking at securities that I like. Companies that I think have been absolutely crushed that'll probably recover from this rather strongly, and saying, what price do I want to buy? Because premium today is extremely expensive, right? Everyone's trying to buy puts today. It makes me regret that I closed out my S&P put a couple weeks ago, because today would have been a fantastic day. But, oh well, we did good on that trade anyway. So, the best strategy, my option strategy for me is just going to be waiting for premium to surge, finding things I'm good and happy to own long term, and if I get them, great. Maybe I'll sell covered calls. So, for example, NVIDIA, I have the 100s expiring tomorrow, and we're at 101. We were at 101.80 today. We were down 7.8%. I collected a nice rate of return for the week. Sold those last Friday. I think it's either Friday or Monday. I sold the 100s, and I may put those NVIDIA shares tomorrow. And I'll be okay with that. I'm fine to own NVIDIA at 100 for the long term. I think I'm going to be okay at that price. So NVIDIA would be a good one. You guys know I can't trade Apple, so Apple's a non-factor for me. But could I go out there tomorrow and sell the 200 strikes and get a ton of premium? You could probably get a huge amount of premium for one day on Apple for tomorrow. I think this might be this might not be that great of a. Let's bring it up here and see if I can find it through this option chain. I know market's closed, but let's just kind of see if we can get a ballpark idea of what that chain might look like for mañana. It's not even giving me tomorrow's options. Bummer. But if I go, oh, there it is, April 4th. I want to give me the old ones here. If I go at the money strike for tomorrow and I sell puts, expecting to buy it tomorrow, not great. It's less than 1% to sell puts, but of course market's closed, right? Market's closed right now, so that's give me bad numbers. But yeah, I'd be looking for. I think the Magnificent Seven will be good opportunities here. You know, Tesla. I think, again, I'm very bullish on Tesla long term. I just like to buy it at lower prices. So I do hope that Tesla continues to fall so I can load up on Tesla. If I can get it below 200, I'd be really happy about that. That was my initial target here. But I'd be looking to collect premium. That's pretty much what I'm looking for, is selling premium, and if I get it, doing the short-term swings. I used to sell a lot of puts. Were you caught in today's meltdown? Yes. So, Ganesh, the two larger positions I have, so I've got 3 in this account that I'm sharing with you guys. I've got a larger position in MicroStrategy, which wasn't down as bad as I expected today. I thought it'd be down a lot more. And I have covered calls against that. I have SMCI, which I've got covered calls against that. And I have a cash secured puts on NVIDIA expiring tomorrow at 100. So, yeah, the selling the puts didn't hurt me today. It was holding the underlier, right? Because I have 600 shares of MicroStrategy. You know, when you're down as much as MicroStrategy was, MicroStrategy's down $30 a share. Now, that's quite a bit when you have, 600 shares. You're talking $20,000 just down off the underlier. Now, my call options on that was great because I had the 330 calls against it. So, those are going to expire worthless tomorrow. I'd love it if we got a nice bounce tomorrow so I could sell some calls maybe at that 330 or 352 level. But yeah, obviously today was a pretty significant down move. And for the long-term positions that I have, or the swing trade positions I would call them, yeah, it was a pretty painful day. Yeah, but it happens. You never like to see that type of thing, but unfortunately it is. 1% for one day isn't shabby at all. Not bad, Liz. Not bad. But you're also juggling chainsaws and playing its crazy stuff. Do you think the Bitcoin cycle is over, and do you think the 4-year cycle will continue? Martin, that's literally the multi-million-dollar question. If you look historically, the move that it's doing now is different than normal. So typically, when it goes into the last year, that 4-year cycle, it should already have started to move up, right? It should have actually started to move back up here in late February, early March. And here we are all the way through April still falling. So this is not really a good sign. I've voiced concerns on Bitcoin and cryptocurrencies simply because we're now getting fractional reserve lending from institutions, right? Institutions are now doing what they do with money. They keep some in their balance sheet and then they lend out more than they have, knowing that not everybody is going to take all their withdrawals right now. If every customer of Coinbase said, I want to pull my Bitcoin off right now, Coinbase would probably go bankrupt. They probably would immediately have to shut down. It's just they don't have all the Bitcoin. That's an assumption, okay? Maybe that someone would call that conjecture. But the way that Bitcoin's been acting, given the colossal demand for Bitcoin, institutional adoption, government adoption, strategic Bitcoin reserve, all that stuff, for it to be falling like this doesn't make math sense at all. So in my mind, I do believe that something is different here. I still do believe in that 4-year cycle, but the more that time goes on, the harder it is. The less likely it's going to achieve that goal. So this vertical line here is that point where I was expecting it to hit 250K. Well, from current levels, if you go to where we are right now, to get up that 250 mark, let me stretch this out a bit. To get that 250 mark, that would be roughly a 207% gain from current levels. It's going to take a lot of work to get there, right? A lot of work to get there. And I'm not sure. I really don't know, what the future holds. I wish I did. It'd be a totally different world. But the fact we keep drifting lower like this isn't very comforting. I've got this 76,000 line here, which I do believe is a low we won't see again. But I don't know. Wow. Really? Okinawa? Hold on, let me look this one up. didn't think they. Yeah. Okay. No, Gemini did not file for bankruptcy. Gemini did not file for bankruptcy. Genesis filed for bankruptcy. Genesis is it's a partner that got caught up in the what was that, the Silvergate banking issues. So yeah, that is not Gemini. Gemini is not filing for bankruptcy, Okanola. That is Genesis. Yeah. Gemini is going to do an IPO, I believe, this year. They're going to go public, so they're definitely not going out. What if we're devaluing the dollar to go long Bitcoin? Well, I don't think that's the issue, Saba. Certainly, I think that there is an interest in devaluing the dollar. We talked about that, and here is the dollar index, by the way. You notice we have some pretty key levels here. The last couple of days for the dollar have been shockingly bad, and we just keep drifting lower and lower and lower on this bad boy. You look at this, are we going to get back to 100 on this one? That certainly is a logical target going forward here. Weaken the dollar, that stimulates economic growth. Then what you do is they're trying to also push those yields down. You can see the 10-year yield here has come right back down to those lower levels. It's interesting how it's stair-stepped. When we broke this level, I had these yellow boxes drawn on, and you saw that we bounced off this level here on the 10-year right around that 4.15 level. We came up and retested our previous supply zone, and now we've sold off, and we've actually hit the lower band here, which is down around 4.4%. And, of course, bouncing off of that today. So now the question is, obviously, there's a head and shoulder pattern that's forming here. I think you guys can all see that. Everybody see that head and shoulder pattern right there? I mean, I could draw it out. Well, let's just draw it out for fun. Let me get rid of some of these other lines. But, this is why on a lot of my charts, I like to have just these yellow boxes just to see where things might stair step down to. And it's hit every one of them perfectly. It's really it's a great chart. So let me go and draw on your head and shoulders here. We'll do a couple different things. First, we'll go across here, which is the neckline. And I'll leave that line there. So now the question is, where is this going to go? Well, if that's the case, there is your left shoulder. There's the head, which goes all the way up to the high on January 13th. We came all the way back down to the neckline, which is great. You want to see it come right back down to that. And now we have officially broken it. So the question is, where do we go from here? If you are a technical person, as I am, this will allow you to forecast where it may go to. And again, this is going to be rough, but you go from the peak of the head, which is right up there at the top, and then you move it to the baseline. And now we get to drag this lower and see, since it did break, where does that take yield? So that should put the yield on this 10-year at 3.3%. That would be great, as Tony the Tiger would say, for the housing market, right? Housing market would love to see. If we saw interest rates drop roughly 1 full percentage point, right? If we looked out, let me just real quickly bring up what that 30-year fixed rate mortgage is. 30-year, let's go, and this is going to be based off the Federal Reserve, usually where I go to get that one. It's not that the Fed doesn't have their number up. All right, let's go Freddie Mac, all right, just to see. Someone's hair is on fire. What are you talking about? What? Oh, I don't know. I don't know the reference there. That one's ahead of me. But anyway, here's your 30-year fixed rate mortgage right now, 6.64%. What was that for, Big Ed? What was the... Anyway, 6.64% is where we're at right now. And look, if we continue to fall like that and get to that target level, then you're looking at 30-year fixed rate mortgages at about, let's say, 5.7, 5.8. That would be great for home buyers, right? That will really help fuel these markets to the upside. 52-week range, just so you know, the last year, high of 7.22% for Fannie Mae or Freddie Mac, low of 6.08. So this could put us back in that low end of that 52-week range, which, as you can see here, we achieved that back in September of 2024. And let's go and see what the rates were in September of 2024. That is right there. September of 2024, the 10-year 3.6. Our target would be 3.45, which means we'd be sub 6%. We'd actually get down to about 5.8 maybe. So that would be great for our markets. And again, this is what Trump wants. Trump wants lower yields. Of course, he wants the short end of the yield curve to be longer or shorter. But he can really help manipulate that long end, and I think that that's what they're doing. Remember, part of this is the lower this gets, the cheaper it is for the government to issue new debt at lower rates, and they can service more, right? It makes the cost of borrowing cheaper and paying back our debt cheaper, so that's a good thing for them. Indigo says, if you get laid off, it doesn't matter how low the interest rates are. Correct. That's right. Right. I think everyone here is in a little bit different category than the average American, I would say. You're more astute with your investments. You understand the concepts of saving and having good credit and paying your credit card so you don't carry any balances. So if it did happen where you were laid off and you didn't have an employment, you'd have monetary means to coast for a little while without going into dire straits. I assure you, right, I would argue he's one of my best friends. If he were to lose his job today, it would be one of those things that he'd lose everything. He'd be evicted. He has no money. He's maxed out on credit card debt, right? There's different calibers of people that this is going to impact more than others. For the astute ones, it's about, I know these markets are looking weak. They're most likely going to go down. The trend is your friend to the bend at the end. We talked about it a couple weeks ago that the bend is broken. We're looking at more downside movement. Great. Either position yourself to capitalize on it or protect current long positions that you hold or go to cash. So when these markets do fall, you can either buy back into the equity markets with a much bigger position, or you look at something like housing. Housing prices are most likely going to be impacted. And this is a double-edged sword here, because if we see this 10-year bond continue to go lower, right? So here's the 10-year yield we just looked at. If this goes lower to the target that's mapped out there, that would lead you to believe that housing is more affordable, right? Because you may not qualify for something at 7%, but now if it's down under 6%, you might be able to qualify. So it could bring in a whole new wave of home buying. The other part of it is, if we do have a financial crisis and it continues to get weaker and people do get laid off, you're going to start to see mortgage delinquencies increase. And there was an interesting chart of mortgage delinquencies. Let me see if I can bring that up for you guys here. Let me see. Let's go mortgage delinquency rates 2025. There was a chart of this one. I'm sorry if I'm trying to do this live here, but there was a really cool chart of it. So there's your mortgage delinquency rate. This is FHA and VA versus conventional loans. Delinquency rate spread. No, that's not what I want. I just want to see the actual numbers of them. Yeah, Jeff, that's a really good point. Knowing it and practicing it are not the same. Yeah. That's very true. That's very true. Well, I mean, that's part of what you got to do in life, right? And if you want to get beat up over it, then you just keep watching the show, because I'm a jerk about that stuff. You gotta save. You gotta put your money where it counts, where it works for you, and don't spend frivolously. Don't buy a bunch of dumb crap you don't need. 400 basis points would do it. What would make TLT go? That would make TLT go up. So Kyle, good question. Yeah. The yields are inverse. So if you see this number drop right here, and that's a great question, Kyle. Probably you're thinking like, well, how do I play this, right? How do I make money off the falling bond yields? Yeah, TLT, right? Because that's going to, you can see it's not quite an inverse picture, but it's designed to be the opposite. So as yields fall, the price of bonds go up. So yes, if you want to play this and you're looking for a way to play it, going long TLT would work. And that, of course, assumes that you believe that this 10-year is going to continue to fall lower in yield. If that does happen, yes, TLT will surge. Absolutely. Yep. Great question. Fed not considering it. Trump wants to lower interest rates, but that could put us into stagflation. I agree with you, Indigo, but right now, you guys have heard me say this many times as well. For us as traders, it's easy to understand how one action might impact one action might cause a reaction. But at this point, we've had 500 actions, and I don't know where things are going to go. I really don't. It's too difficult to hang your hat on something. Like, good example is last night. Last night going into it, I was like, I had a pretty strong feeling that we're going to see a little bit of a backpedal. I saw tariffs being implemented, but I thought we'd backpedal a little bit. We got none of that, and markets did not like that at all. And of course, I got my teeth handed me today. So even though you think you got a good plan and idea of what's going to happen, markets are always going to keep you guessing. So, we'll get back to where we were financially and recoup those losses and just keep grinding away as I normally do. But yeah, today was a humdinger, as they like to say. Dakota, if the 10-year gets to 3.2, would you suggest that the S&P gets to 3,500 or it correlates with the 2023 numbers? So this is where it's a really good question. What you're asking her is a very complex answer. There is no same situation, right? There is no standard answer for that, because here's what I mean. If you look at this, and let's say that Dakota is right, or Dakota. Sorry. If Dakota's right, and let's say we do get down to 3.2, all right? If we get down to that 3.2 level, and I'll leave this line here, but let's say 3.2 is even lower. What that means is money is cheaper and more readily available, right? As an economic catalyst, having a 3.2% 10-year yield versus a 4.2, money is way more affordable, not only to businesses, but to you and I, which could put us in the situation of, okay, now I can go buy a new home. I can refinance maybe if I got stuck at a 7% mortgage. Now maybe I can get something in the 5s. So that should act as a financial catalyst, right? It should act as a spending vehicle to stimulate economic growth. So on one hand, I would look at that and say, it should, in principle, accelerate the S&P to the upside. It should cause markets to rally because you've got influx of capital, money coming into the market. That said, that's one textbook version of how a 10-year bond might be impacting the economy. On the other side, we have this whole new thing that we're not used to at all called tariffs. So right now what you have is markets positioning themselves for this uncertainty of the tariff impact, which is causing panic. So even though we have the lower yields, which should help our markets, it's not. At some point, one of those things is going to break, right? Either the yields are going to surge back up and markets are going to continue going down, or the equity markets will find a bottom and then start to rally up. I'm more in the camp of equity markets finding a bottom and starting to rally up. Not tomorrow, maybe not next week, but over the next couple of months, like I said at the top of the program, I think you're going to get a lot of countries going, white flag. Okay, done. We see how this is impacting us. It hurts. We don't want that. We want to open up our doors to you. We'll remove tariffs. Just buy all our darn shoes from Vietnam, right? Buy all our cars from Germany. You'll see concessions made here, and then I think you'll see some bullishness come back. So I don't think we're going to get an economic collapse. I know a lot of people here are on the recession camp and think we're going to see depression. I think we'll see a slight recession. I think that the pain from these tariffs is going to, be several months, but ultimately it's going to give you and I amazing buying opportunities. I think the yields will be lower, and that should cause for a nice market rally, but that could be tail end of this year, maybe beginning of 2026. So going to be a while. Scott Besson's plan is working as intended, right? I feel like he's Lord Palpatine.
Everything is proceeding as I have foreseen.
Right, your evil overlord. That one hurt the voice a little bit. I'm gonna take a sip of water. I can't do like crazy voices like I used to, which is why I like making fun of Trump. Trump's talk track. I can't. That one doesn't hurt the throat. Okay. Let me keep going through here, and then I'll get to your questions, Michael, on Pfizer. Let's see. All right, I think we're pretty good here. Ganesh, why are the Chinese automobiles and Singapore down today when they have no exposure to U.S. tariff or Chinese auto? It basically means that they're going to be cut off from the U.S. as well. So your cars aren't coming to America. So the BYD motors, they're not here yet. I believe the plan was they're going to start. Not now. So I think it just overall automotive consumption, I think, would be hurt. I know, it wasn't precious. I can't get that real raspy Palpatine.
Everything is proceeding as I have foreseen.
It's more like that, I think, but that was just a little bit raspy. Let's see. Equities will find a bottom. Question is, Steve, they always do. Equities will always find a bottom. And they'll always find a top, right? We just don't know what those points are. That's why I run through our top 10 markets. So we did the S&P. Let's get to that dollar index because that's a pretty just colossal candle out there today. Big red move to the south side, breaking through that 103 level, which was the logical target. If you look off to the left here, where does that put us? Well, it means we're probably headed down to this low point right here. Like the dead low is going back into September of last year, which would put the dollar right around 100. Right around 100. And then lastly, gold. The one that's been doing so well, even that was suffering. It wasn't down as much, and now it's selling off a little bit more in the after hours. 1.41% slide for gold. So, Jeff, yeah, we have a couple of things out there that we're moving. 39% rally up in the VIX today. But I'll tell you what, if you follow historical numbers, if you are someone who reads Martin Pring's book on technical analysis, or these classic chartered market technician books on VIX, a VIX of 30 isn't that bad. Remember, VIX is high, time to buy. VIX is low, time to go. And remember, those numbers were about 20 and 40. That's what those two horizontal red lines are. I've got a horizontal red line at 40 and a horizontal red line at 20. And if you go by the original mantra of what VIX is, if it's up here, time to buy. And if it's down here, below 20, time to sell, right? That is the gist of it. And if it's in the middle, you don't do anything. So if you look where we're at right now, we're in the middle. We're literally at 30.02, which is dead center between those two. Yeah, it was a big jump up today, but that's not reflecting panic, right? If this does continue like we saw maybe back here in August, you could get a big spike, then that might be more of an indication of pain. Right now, I don't think there's pain. This is not, even though we saw a 5% down day, well, 4.89 for the S&P, 5.48 for the NASDAQ, 6.57 for the Russell, even though we saw pretty big numbers compared to our norms, I don't think that these are like capitulation, panic, falling off the cliff moments. That may come, and I think that would give you a better buying opportunity. So I certainly am not looking to buy right now any of these markets. I want the pain either to persist. I think we're going to persist here a little bit. Apple and all the components they get from China. All the iPhone production. Now you're going to have to pay 20% tariff on that, plus maybe extra bonus tariffs on it. That's going to hurt Apple's bottom line. Amazon down 8.9%. These are just big down moves. Almost double digits for Meta, Amazon, and Apple. I know a lot of people loving Meta. If you look off its peak, Meta is down significantly over the past couple of weeks. You're down 28% off its all-time high. We were bad-mouthing Tesla for being down 50, and that's because of a lot of political stuff, I think. Here with Meta, I don't know. 30% slide is pretty darn good. I'm trying to look at some of the other ones here real quick. Google also, God, there's so many just delicious buying opportunities if you have the patience and willing to take a chance on these equity markets. But a 27% slide off its peak here for Google. Microsoft has been getting beat up as well. We'll go from its high back in December to where we are today. We're down 18% on Microsoft, but Apple really starting an aggressive fall. Remember, this was the heaviest component in the NASDAQ and the S&P. Down 21% off its high. There we go. Newsmax did well today. You got your three-day chart. It was up to 18%. Yeah, what? Why would you ever want to touch that thing, right, Big Eb? That's crazy. Damiani said, don't be the first in the train, just be there when it's ready to move. I agree. Right now you are certainly in that catching a falling knife phase. If you try to do anything right now, just be very, very careful. I'm not doing anything. I want to see how my positions shake out tomorrow. If I don't get exercised on my NVIDIA shares, I'll probably sell more puts expiring next week for NVIDIA, and I'll keep doing those on a weekly. I actually like the 100 number, so I may actually do them at the money if they, because you get a lot more premium for the week if you're going at the money on an NVIDIA put options. But there might be some other trades I'll make for tomorrow, but most likely I'm just going to wait and see what's going on with these markets. It's just absolutely chaotic what's going on. So let me go back up here. I had some nice pictures. I'm sure some of you might have felt like this today. I love this AI picture. They did pretty good with the darn hands. This guy is so iconic. He's on the floor of the New York Stock Exchange, and I guess AI knows that if you want a panic moment, he's the guy that you put on there. What else did I have? I had the pain ones. I had Evaporation Day, which is money just ripping out of people's accounts. And then there's our sea of red. Just a brutal, brutal day. So what do we have to look forward to tomorrow? Well, there might be something that slows this down a little bit, and that could be your unemployment rate. And it's funny. It's one of those things that could actually act as a real negative catalyst or a positive catalyst, and maybe balances things out. Judging by the way we've been going, though, I don't know. We got a lot of jobs data here. 5:30 tomorrow morning Pacific or 8:30 Eastern time, so 1 hour before the equity markets open. You have average hourly earnings. You've got non-farm employment change and the unemployment rate. And remember that unemployment rate is expected to stay right at 4.1%, which is kind of flatlined over the past, let me scroll up here. Flatlined is slightly down over the past few months. So not too bad. Let's see if it comes out at 4.1. Anything outlines it could be pretty volatile. You also have Jerome Powell, the man, the myth, the legend. He will be speaking tomorrow. He's speaking at the Society for Advancing Business Editing and Writing Annual Conference. Wah, wah. That's in Arlington. I don't expect there to be too much there, but remember, when he gets on these stages, he's got a pre-rehearsed thing he says, and then many times he'll field questions. And if he fields questions, that's usually where he makes mistakes by being put on the spot. And then on the earnings front, nothing going on for earnings that are really noteworthy. There were some today. I'll bring those ones up here so we can see those real quick, just to look at the names. Walgreens Boots Alliance is one of them. Lamb Weston came out. ConAgra Brands. Guess did not do so well after that. And then we have... nothing for tomorrow. Nothing on the earnings front for tomorrow. So that will do it. Bloodbath, sea of pain. Our $2.85 trillion evaporated in one day. Pretty crazy to me to see that much money disappear, and it may not be over yet. Liz says, do you think that markets will be more sensitive to average hourly earnings, unemployment tomorrow? I don't think the average hourly earnings will be that big of a deal, but I do think that it's going to be... pretty important what goes on at the unemployment rate, because as Dakota and others have asked questions about how bond yields impact the markets and impact the S&P, unemployment does as well. And for us to maintain growth and keep the economy going, right, we need to keep unemployment under control. If that number does continue to drift up, again, we've made this point 1,000 times, and today's the 1,001st, it's not aggressively going up, and it's not at levels that are dangerous for the economy, but it's the trend that's concerning. And I've in my mind, I think you're going to see those numbers slowly increase over the next several months because of all the layoffs going on government side of things. And then I think because of some of the tariff issues, the talks of economic slowdown, that we'll see more layoffs for businesses. And I actually been doing a little bit of research on that. I'll see if I can see. I was thinking maybe doing a show just on what the layoff scene looks like in the U.S., like who's actually doing layoffs and what are the trends there. Because if you start to see that increasing more and more, right, let's say that Nike comes out and says, hey, we're laying off 20,000 employees. That tells you that tariffs are hurting Nike bad, and the consumption is so bad, meaning people aren't buying Nike shoes because now they have to raise their prices very high, that Nike stock will probably continue to go lower. So they're trying to streamline their operations by getting rid of employees so they don't hemorrhage to death financially. Those come through the unemployment side of things. And then those people don't have jobs, so they can't go out and buy Nike shoes, and this cycle gets deeper and deeper. So it is not something that, like the Trump speech yesterday, just snap your fingers and factories are built. These things all take time, months, weeks, months, and possibly even years to come to fruition. And that's the benefit that you and I have, is we have the benefit of time. We can be patient with our investments and our choices. Just be very careful. Big tear me apart again. Can't wait for the J-Powell presentation. Chris. Yeah, I'm not going to go political on that one. It's funny when he was like, you're going to be so tired of winning. And I saw an interesting chart that showed like the S&P performance in the first 100 days of president's offices. And this was one of the worst ever. Yeah, he's also done some very, very radical things. As someone who considers myself just an American, I don't consider myself a Democrat or Republican or Libertarian. I consider myself just an outright American, and I want this country to succeed. I may not agree with all of these actions. Some of you do, some of you don't. I don't really care. I just hope it's in the best interest of the United States overall, and ultimately, I hope we come out smelling like roses at the end of this. But you never know. Just trade it. Try to capitalize on it. Are we winning yet? They will disperse into pockets of those going in. Nothing's lost. Unemployment is higher than 4.1. Look out below. I don't think it'll be that big, Stephen. I don't think it's going to be like a super panic moment, but I do think that if we get a 4.2 or a 4.3, I think it'll probably be 4.2. I think it'll be just slightly higher than expected. Remember, we haven't had that long of a period of time. Trump took office in January 20th. So you go 1 month, you got February, another month, you got March. I mean, we're 3 months in, less than 3 months. So we still haven't had the impacts of all these layoffs. So we have to give that a bit more time. But yeah, love it, Lori. It's a great one. I can't control politics. All you and I can do is vote. And then, at least from my perspective, respect people's opinions. Don't get hostile over it. Don't get angry. Don't shout. Don't make enemies because of your specific views. Just vote and do what you can to improve yourself no matter what happens in either party. So that's going to do it for me, everybody. Friday tomorrow, I'm probably going to be in the need for a glass of whiskey. So if you guys have something you want me to cover on tomorrow's show, you know what to do. Hit that button there or just email me at tradermerlin@gmail.com. Let me know what you want to cover on tomorrow's show. If you are new, I see a lot of new names here. Hit that subscribe button or the like button if you are new to the program as well. I am pretty open to topics and discussions. So if there's something you want me to discuss, type it into the chat down, or not chat. Put it down below the comments on YouTube. If you're not watching live, if you are watching live, email me at tradermerlin@gmail.com and I'll get to all those ones. Thanks so much, everybody. Have a fantastic day. I hope that tomorrow's a better day for all of you. Certainly for me as well. I'll see you tomorrow. Oh, sorry, Michael. I forgot about your Pfizer. We'll get to Pfizer tomorrow. I promise. I'm writing it down right now.